Hello to all of you. Well, it's a really exciting evening and early morning in America for some. But I think really what's important here and what we want to run through is something that we've actually been working on for the last 12 months. And I really wanted to kind of go into the detail. But before I do, I just wanted to welcome, I think it's probably the biggest webinar I've ever been on. But we've got Jacques that is going to spearhead and really talk about the hassle-free. We've got Jakes that really runs all our compliance within the team from the legal side. We've got Yanni that's really run and looks after the customer service and been the brains behind Wealth Assist. We've got John Herbert that I think many of you know personally and have spoken to on both the legal side, the LLCs and the bank accounts. We've got Michiel that quite frankly is the brains behind our operation and really has been working on the nuts and bolts and trying to work out how we could make this work. And then we've got Todd Baldwin who's also online and has helped many of you from an accounting perspective. So I just firstly wanted to welcome all of you online. It's fantastic to have so many of you, and equally to have all our investors and friends that are also online tonight.
Scott. Thank you, Scott, and welcome to all the investors.
Excellent. So I'm going to rock and roll. We've got a jam-packed evening. We've got a lot of information to share, and I think what's really important here is that we're also conscious of the fact that people's time is valuable. So just to start off with, from a legal perspective, we're doing our best to really be able to provide people with the best options, but equally, we're not necessarily giving people advice. I think you know me well enough to know that our philosophy is about empowering you, giving you access to the best information, ultimately helping you to make the best decisions for you and your family. But we're not giving advice. At the end of the day, the purpose of this webinar is to give you access to the best information that we can find, but ultimately the responsibility lies with you to make the best decisions. I think in terms of agenda, just so that you know quickly, we're going to run, I'm just going to go through a quick introduction. We're then going to hand over to Michiel and Jacques and then Todd and John with regards to the hassle-free, which is something I'm super excited about. We played a what-if session probably in March last year. Got quite serious in July last year, and it was what if we could actually help all our clients with residential property get onto the platform. And tonight is the culmination of that. Then we're going to talk about Wealth Assist, and Yanni and her team are going to take you through that for really taking our level of service to the next level. I'm going to summarize the different options and ultimately look to the conclusion. And then we really want to make sure that we spend some good quality time to do Q&A and to get into the discussion. It's the reason that we've got so many people here tonight so that we can answer those questions. I wanted to start off with a little intro. And I think it's really important that people understand where we've come from. A lot of you know RPS, a lot of you know the evolution to Wealth Migrate, but I just wanted to highlight some of the things. So this was the very first mission statement for RPS, which was created back in 2004. And in simple terms, it was to take an old industry steeped in tradition and run by many smaller, disparate, and often inefficient operators, and to redefine it through the use of web technology to increase global reach, partnerships, efficiencies of scale, and to provide a one-stop enhanced and personalized service to our clients. And that's really what we've been driving now for nearly 14 years in terms of trying to achieve. Then back in 2009, I met Henny, and we realized that, I think a lot of you have heard the evolution from Wealth Migrate and the opportunities, but ultimately, rather than just being able to buy the assets that we could afford individually, was where you have the buying power and people come together. This was the very first business plan that I gave Henny back in June 2010. And ultimately, you'll see down the bottom here, I put it in red, they will also use IT to provide a transparent and efficient platform, creating massive value to clients. Then the vision in those days was to provide a global platform for international property investment, revolutionizing the property industry like Google did to the internet through the use of technology, providing real transparency and value to clients, the trusted global solution. This year is our plan that we created in 2014 as a team and shared with a lot of our wealth partners in 2015, and it was our 2020 vision. And I think happy to share this with anyone that wants it. Just put in their 2020 vision in the little typing box. But ultimately, it was to create your trusted global real estate marketplace. So as you can see, we've been evolving more and more towards technology and how we can add more value to clients. Really what we looked at here was a mission statement to be recognized as the trusted global real estate portal with global investors engaged to use our state-of-the-art systems to learn, create, global wealth, invest, and manage their real estate portfolios while providing partners with a global standard in due diligence, focusing on simplicity, mobile technology, quality, and safety. And I think lastly, in 2016, we revised this again, and this is our one-page business plan for the Global Wealth Group, ultimately Wealth Migrate and our platform. And I think the most important thing I wanted to just show you was our core customer at the top. Our core customer is the online investor. We delight them by providing trusted access to high-quality global real estate investment opportunities that give them confidence and increase their net worth. Now, why is this important? Because if you look at all of those different statements all through the years back to 2004, you know, there's some words that come out for me. One stop, enhanced, personalized service, IT, transparent, efficient platform, creating massive value for clients, transparency, value, trusted solution, and online investor. But really what's important to us is that it's only about two things. There's lots of pictures here of many of the exciting trips and very memorable trips that we had to America. And here's another screen with a whole bunch of different memories and different people. But I say there's two things. And why I say that is the first one is that for us, it's all about our customers. It's all about the people that actually are investing, our investors. And secondly, our intention was never to sell them a property. Our intention was to go on a journey with them. Now, does that mean that we make mistakes? Absolutely. Does that mean that we know everything? There's absolutely no ways. But what it does mean is that we committed to go on a journey and to ensure that we can continue to deliver in terms of the optimal experience. However, saying that, some things are out of our control. What we can't control is the banks. Tireless effort has been made by Yanni and her team and John Herbert and his team. I mean, this was one of the very first pictures when we were in Wells Fargo. Actually, this day was the day that I found out that my Bank of America bank account, personal bank account, and Wealth Migrate bank account had been closed, and they'd sent a bank guaranteed check back to South Africa. And what was interesting was we actually set up in Wells Fargo. This was the second buyer's trip, and we thought we had it all sorted in Wells Fargo. Little did we know that there would be another, this would repeat itself another 3 times. You know, for me on the management side, you know, there's nothing we can do about the communication with regards to the management. Yes, we can stay on top of them. Yes, we can create third party in terms of Lani and her whole team that are managing stuff, so we're not reacting and finding out from clients about vacancies or any problems. But we can't necessarily control third parties and the service they deliver and or the communication that they deliver. We can't control the banks. You know, when we started investing back in 2012, we were given very clear indications that it would take a year and a half, maybe 2 years to be able to get a credit application. Once we got a credit application, we could get, you know, finance from a bank just like everyone else. And yet we're now 5 years down the track, really. And with no sites, you know, we can't even open a bank account, let alone, you know, organize a debt from a traditional bank. We haven't been able to really manage the costs on the LLCs. So, you know, you can have a property that's paying you a good return, but the real return is eaten away by the running costs. Now, those running costs were very clear. If anyone looked at any pro forma or cash flow that you were given, it was always around $2,000. And we always said to people, if you're only buying one house, it probably doesn't make sense. You need to build portfolios. You need to build, you know, up to 10 houses, etc., because the costs stay the same, but it gets diluted across many different properties. But what's happened and what's interesting in time is that the more the commercial properties came online, people started to evolve towards the commercial properties and equally without the bank debt. And so, you know, in terms of the costs, it became something that was very real, very material. And particularly as people went more and more onto the platform, they realized it was something that they didn't need. And then finally, from a tax perspective, obviously, you know, everyone realized that they had to be tax, do their tax returns, etc. But that also, you know, adds to the costs in terms of where we're at. And so, you know, in conclusion, for me, as part of the introduction, something that I think is really important is that, you know, if you remember back in September, Kevin Allen started this project and went out and reached out to all of you and actually asked for an average rating as to how IPS and Wealth Migrate have provided a service. And what I think is really important to recognize here is that on average, we got more than a 4 out of 5. 4 clients are not happy with us. They gave us a rating of 1. 1 gave us a rating of 2. 18 gave us a rating of 3. 26 a rating of 4. And 35 a rating of 5. So I think the one thing that Yanni, you can certainly pat yourself on the back is that most people recognize the tremendous value that you and your team have really brought to the table in terms of the service. What we haven't been able to control, and this was equally in the same survey, is, and this was the number of people that complained in terms of the problem areas. Communication with management agent is poor. Communication with service providers. No disrespect, Todd or John, don't shoot the messenger. My tenancy vacancy rate is high and I'm not making my expected return. The cost of the LLC, accounting fees, the property taxes, the administration, closing of bank accounts, the financing costs are too high, the maintenance costs are too high, the eviction costs are too high, obtaining bank finance has not been possible, and other. Now, really, when you look at this trend, I learned something many, many years ago, and that's the theory that Albert Einstein has taught all of us. And he literally said that insanity is doing the same thing over and over again and expecting different results. And so we've been investing in America now for 5 years. It started in April of 2012, so effectively it's 5 years. And if we continue to do the same thing, and 5 years from now expect it to be different, then really we are lining up for the Albert Einstein. And so I talk a lot about making mistakes and also learning things. I talk a lot about, a lot of you have seen me talk about chapter 13 in this book of ours in terms of the lessons we've learned. But really for us, it took a huge amount of tenacity. I mean, I think to put in perspective why this tonight is such a big occasion, we've had more than 10 people work on this internally, inside IPS and Wild Migrate to really resolve this. It's taken 2 full-time trips just to America with many people involved, not just a Jaco or a Michiel. And it's taken extensive time with the likes of John Herbert, with Todd and his team, John Herbert and his team, and also the guys in terms of the mortgage side, Scott Gruber and their team. And so with tonight, I really wanted to hand over to the team and really introduce effectively what is the threshold of something that I believe is truly really exciting. We believe we've turned the dream into a reality, which is to take away some of the pain points that we can't control when it comes to residential houses, allow people to reverse them onto the platform, which is what we call hassle-free, but I'm going to let Jacques go through that. We've also come up with a better solution to be able to help people should they want to hold houses, so that Yanni and her team can provide a better, more focused private banking service to clients. And then the third option is the DIY option, which is for those people that want to do it themselves. And so without further ado, I really wanted to, sorry, just quickly before I hand over, one of the things that for us in the month of June, but I'll leave this to the team to go through, but the month of June, tonight is an important night, because the month of June is the month where people get to answer all the questions they want, to finalize the details, get the facts, and ultimately make a decision. Our intention is not to be delaying this for months and months, because it's actually in everyone's interest to make a decision and to go on with that decision in terms of where we are. So, as I said to you, without further ado, it gives me great honor and a privilege to hand over to Jacques. I'm just going to change over the presentation screen here. And what's really important here is that Jacques actually recently joined the team. He comes from a very high pedigree background within the banking environment. He's joined Willie, who many of you actually saw on the due diligence side, and he's also joined, obviously, Michiel and the team. And they've worked extensively. I mean, this is a project we've worked on extensively now for 12 months. And really with quite a lot of excitement, tonight Jacques is going to present to us what the opportunities are for people to take residential property and move into the future with regards to technology. Jacques, thank you, and over to you.
Okay, thank you, Scott. Thank you, everybody. So what I'm going to be talking you through is the hassle-free proposal and product that we have that we want to present to you tonight. So firstly, let's just start off the original IPS concept. IPS offered single-family homes after economic downturn, and as a result, the investment idea was to build a residential portfolio and houses in LLCs. The assumption was that individual investors would build a portfolio of between 3 and 5 houses. And what typically happened is that investors invested as between 1 and 2 houses. The loans are financed at roughly 50% loan to value. Quite high interest rates of between 12 and 9.75%. And due to this, the cash flow is very sensitive due to the high interest rates, the maintenance costs, vacancies, and we also have continuous bank closures in this portfolio. So for this reason, investors also have been asking us to come up with an alternative strategy, and that's when we come up with this hassle-free concept. So let's run into the hassle-free concept. So I just want to get my screen to change. Okay, so in essence, what the proposal is that on the left-hand side, you'll see the screen here. We have all our individual owners of houses in the LLCs with individual ownership, and the proposal is then to have it all transfer all those houses into one holding entity, the hassle-free LLC, and it becomes group ownership in a Wealth Migrate platform. And then all the owners of the houses currently will then hold shares in the listed entity through the Seychelles. So the idea is to transfer properties into a listed entity, and you then hold shares as an owner of a house. What is in scope and not in scope? Firstly, what is in scope is residential houses only. Phase 1 will be for Atlanta properties, and further phases later on will include Texas, Memphis, and Oklahoma. What is not in scope is any commercial assets, so any shareholding in any of our commercial buildings is not in scope for this. And also no condos. We're not allowed to have a mortgage over a condo, so condos are not included in this project. Okay, Scott alluded to a survey we did last year as well. So we also did a survey in October last year to try and determine how many people would like to participate in a hassle-free product. And from the survey, 55 people responded yes. And just in also to give an idea of where the current portfolio is residing at, 163 of the houses is in Atlanta. We've got 37 in Memphis, 5 in Oklahoma, and 2 in Texas. For this whole proposal to work, we will need a minimum of 40 houses will be required for this to work. Okay, what will be the process? So for investors that's got a bridge loan, the process will be step 1 is the transfer. So buy the property at purchase price by way of an equity exchange. So this means that the hassle-free LLC will purchase the property from the investor LLC at the purchase price. The current bridge loan will be cancelled in the investor LLC, and Bridge Capital will issue a new loan in the hassle-free LLC on that property. The share allocation in IBC equal to the equity in the investor LLC. In this whole process, there will be no cash flow from the individual house owners. The shares will be issued as compensation for their house transferred. So the equity will be calculated by taking the purchase price less the outstanding bridge capital loan. That will represent your equity contributed into the hassle-free LLC, and you will receive shares to the value of that. Step 2 will be closing. At closing, the investors are to contact John Herbert to close the LLC and dissolve, and also contact Todd Baldwin to do the tax returns for 2017 and deregister. Those costs will be for the investor's pocket. That's what the only cost that you will have to pay for this proposal.
Quick question here. Sorry, Jacques. Yeah. I'm just going to ask questions if they're relevant at the time. Someone just asked, what's an IBC? You mentioned you said the IBC. It's going to transfer into an IBC. So just the IBC, yeah.
It's an international business company. Yeah, there. Thanks, Jakes.
So it's part of the listed structure in Seychelles. IBC, International Business Company.
Sorry, Jacques. I won't button off, and it's just if it's perfectly relevant to a slide or something, you know.
Please do so. I appreciate it. Okay, so step 3 will then to try to the hassle-free listing on IBC. As Jack said, that is the company in the Seychelles. The pre-listing agreement will need to be approved by the listing committee. Investors will then register through the Wealth Migrate portal and will be able to manage the portal online. Step 4 will be the holding period. Investors will receive quarterly dividends during the holding period. And step 5 is our exit strategy. So we're planning to exit the investment in 5 years' time. Next, we show the process for investors without a loan. The process is exactly the same. The only difference is in step 1 where you do the transfer. There is no current bridge loan, so there's no bridge loan to be cancelled. So what will happen is that hassle-free LLC will purchase the property from the investor LLC at a purchase price, and that purchase price will relate directly to your equity.
I would like to add at this point is that this is quite an advantageous step for a person that has bought the properties in a personal name or in their LLC name. We will able to be actually put a loan onto this property, so the investor that has bought cash will actually have the exposure roughly at, if you had a $100,000 house, you would get an exposure of the investment at $220,000. So effectively, we're going to take out a loan on his behalf through the common loans that we're going to put into the hassle-free LLC. So means that he's actually getting a geared investment where he had previously a cash investment only.
Okay, thank you, Michiel. Okay, I'm going to step over the next slide. That is the same as the one we discussed before. So then next we just go into the role. So Bridge Capital, their role is their role and offer. So on Bridge Capital side, they will cancel all the existing bridge loans on transfer of the properties. They will then issue new replacing loans in hassle-free LLC at between 55 and 60% loan to value for each house transferred. So that will be each house, and as Michiel explained, whether there's a current bond on it or not, each house will have a mortgage going forward. Annual interest rates on the loans will be 7.25% for the first 7 years, and then 8.4% thereafter from year 8. This is a big reduction in the current interest rates you're currently paying on your houses of between 9.25 and 12%. Bridge fees at origination will be 3% of the loan amounts. For hassle-free LLC, they will charge that to hassle-free LLC, and the monthly. They will also be responsible to do a monthly recon. We will do one bulk payment of the bond to Bridge Capital, and they will then have to do a recon to allocate those payments to the individual loans. So that will be their role. Next, the Wealth Migrate role. Our role will be to manage the project from start to exit. Set up the legal and company structures in USA and Seychelles, appoint a property manager in USA to manage properties, administer and pay quarterly dividends to investors, and then continuously monitor performance and identify non-performing houses to then be sold and replaced with better income-generating properties. Okay, next we look at the legal side. So John, you're online. I don't know if you want to quickly just touch on your function in this project.
Yeah, that'll be fine. I don't mind going on camera like Scott since I'm so far away. People maybe should see my face. A couple of comments. Look, on the savings side in this thing, you've got annual fees with our firm between $500 and $1,000 to just simply to maintain your LLCs, regardless of not if you're doing any transactions during the year. I don't have to tell you about banking problems we've had. You're more than aware of that as banks change their attitudes about what types of accounts you're going to take, what type of accounts you're going to close versus keep. And I know you came into this, whether it was this year, last year, or 5 years ago, with certain banking expectations. And quite frankly, certain banking needs that you need in order to own a rental property here in the United States. Unfortunately, the banks don't see it that way, and we have been on quite the journey with them. We have found a good banking partner right now in Golden State Bank. However, we've all heard this song before. So this should be one of your considerations when you're thinking about whether to participate in the hassle-free project or not. Will our banking journey continue? More than likely, we'll be in the same place again. I know Todd will talk about taxes and tax returns, but that's an important factor as well. From a liability standard, you will certainly have reduced liability exposure when you're not owning these rental properties. Of course, you've been very smart to put these properties inside an LLC or some other type of entity so that your personal assets are protected. However, it doesn't mean that the LLC is immune from the cost of a lawsuit. The primary concern, of course, is premises liability. As a landlord, you have a duty to keep your property safe and in good repair. And with your being so far away, it is difficult to know without your eyes on what is going on at your property from a physical plant standpoint. In fact, we're busy right now defending 2 landlords in court, no IPS or Migrate landlords, of course, but local landlords here, because of this factor of premises liability and things going on at the property. Now, in both of these cases, it doesn't matter that the lawsuits have merit or don't have merit. You're still forced to defend them, and so therefore, one thing to consider is being a shareholder, an indirect owner in these residential properties versus a direct landlord in these properties gives you as an investor another layer of insulation from liabilities. And I think the guys will go on to talk about economies of scale, the ability to have better management, more effective management, and quite frankly, the risk exposure. If you have one house in your bunch, then the apple does spoil the bunch. If you own a company that owns quite a few houses, I think it's more efficient to deal with that.
Yeah, thank you, John. Thanks for that. Okay, next we're going to go over to tax. So Todd, you're also online. Over to you, Todd.
Hello. Yeah, I'd be happy to help from the tax point of view as well. We will certainly assist with, John, as he mentioned, would be working together with you to close down the LLC. We would be working with you on a tax perspective to facilitate that as well. With disregarded entities, there is a tax withholding that's required, and we had discussed that if you have a disregarded entity LLC, one way that we feel comfortable that can change that whole situation is by adding a member to your LLC for this final year. And it would actually create a partnership, which a partnership is only required to withhold if there's profit, and not required if there's no profit. So we will probably work, we will be working with the individual, each of you individually with your project, tell you the tax implications, and walk everybody through that whole process so that you're aware of what obligations there will be, and we expect there not to be any obligations for the whole group. So when we actually sit down and figure out who's exactly going to move forward with this program, it certainly will cut down the costs, as John mentioned, of administration, because if you close down the LLC, there's no tax returns to file. The only tax return will be with the main company, which with that cost shared among so many people and so many investors, it'll be a fraction of what you're currently spending. Yeah, with the partnerships, if you're already a partnership, then again, the gains or losses will be calculated within the partnership, and it certainly won't have, it should not have a tax effect. And even if it does create a profit in any sense of the word, most of you have losses that have carried forward, so those losses will use up any profit to make the tax implications very minimal, if any. So we think it is a good move to go in this direction. And for those of you especially that have high interest loans, those have really eaten into the profits, and getting that interest rate down as a group loan will make a big difference. So with that, turn it over to back to Jacques. If you have any questions, please let me know.
Thank you very much, Todd. Like I said, next slide, I just quickly want to take you through the basic structure, how it will work. Let's start at the bottom of the slide. You can see there's all the individual houses. When we did our modeling, we worked on the 55 houses of the original sample that people indicated they would want to participate. So we just use an example. If you have 1 to 55, it can become 120, 200, how many ever houses can move into the hassle-free LLC. The shares in hassle-free LLC will be held by Hassle-Free Inc. in the USA. And then this is where the investors, where you guys will come in through our structure in the Seychelles, Hassle-Free Limited, where the investors will then hold shares in Hassle-Free Limited. As explained earlier, there will be no cash transfer from your side. Your equity in this entity will be based upon the equity of the property that you transfer into the Hassle-Free product. Okay, what is our exit strategy? Our exit strategy is, like with most of our commercial properties, also to exit within a 5-year period. And currently the plan is that it seems that there is a lot of interest from the REITs to buy portfolios, and the strategy will be at the time to look for a REIT or a similar investment type firm to buy the portfolio over from us. This will obviously all be dependent on the market conditions being favorable, and us being happy with the returns that we can get from it, and the returns we can get for our investors out of it. Okay, so I think this is the interesting slide for everybody, our expected returns. So what we did is we modeled this on the 55 houses that we got the indication from would like to participate originally. So what we did, we modeled it to come up with the IRR for the project before tax will be 11.93%. After tax, the IRR comes to 9.20%. The interesting number is the investment income. So you could get an average return of 5.5% per annum, and that will be distributed by way of quarterly dividends. As you can see there, we show the year 1, 2, 3, 4, and 5 expected returns going from 5.4 to 5.0 up to 5.9% in year 5. The above hurdle income, so our hurdle rate is 7%. If there is any above hurdle income, that income will be split 60% to the investors, 15% to Bridge Capital, and 25% to Wealth Migrate. And at the end of the day, after 5 years, when we sell off, the capital gain split will be in the same ratio. Investors will get 60%, Bridge 15%, and Wealth Migrate will get 25% of the profit that we make. The capital appreciation, if we worked out capital appreciation between 5 and 8% to get an idea what our swing and IRR would be. So for the modeling, we used 5%. Our IRR comes out at 9.2% before tax, as mentioned earlier. After tax, as mentioned earlier, sorry for that. And if we take that capital appreciation, if it were to go up to 8%, that IRR becomes 11.5%. So it just shows that the IRR is very sensitive to our capital appreciation in the properties. So that's important for you to also know that. Just some assumptions we used in our modeling. We used the 55 houses participating. We used annual rent escalation of 2.25%, a vacancy rate of 5%, so we included vacancy in the model, property management fee of 8% of the gross rental income, that's for a property manager that we need to appoint, monthly Wealth Migrate asset management fee of 2%, Wealth Migrate equity raise fee of $3,000 per house. All these costs that I'm talking about here are costs for the project. It will not be costs for you as an individual owner of the house. All these costs are part of the project. It will be charged to Hassle-Free Limited. And the bridge origination loan fee of 3%. And they will also charge an interest rate of 7.25%, as mentioned earlier. And there will be no additional cost for the investor. We just want to again reiterate that. Okay, this slide just shows you a comparison between the current cost that's currently being paid versus what will be paid. So you can see insurance, currently the average is $554 per house per annum. That's expected to continue. The management agent commission is mostly at 10% currently. We're looking to get that down, bring that down to 8%, with it being in a fund now. Landlord protection of $199 per house will come down to $100 per house. Property taxes will stay the same. And then here comes the big one, the average LLC cost. This includes the accounting fees, is on average $2,500 per house. If you move it into the new structure, we pay an annual fee of about $25,100 per annum, and that would equate to about 10 individual houses cost. What we said earlier, for this project to work, we need at least 40 houses participating. So you can see if we have at least 40 houses, the cost saving that we have on the LLC and the structures costs are quite substantial. Just as a note at the bottom here, the LLC closing cost for owners, legal costs will be between $450 and $500 per LLC for this dissolution of the entity. And then the tax and accounting, as mentioned by Todd earlier, will depend on the scope of work needed to close down your specific LLC. So what are the advantages and disadvantages? Advantages of the structure is a reduced annual structure cost, as I mentioned 2 slides ago. Lower funding rates, interest rate now being 7.25% compared to the 9% and the 12%. You have no need for an individual bank account, so that trouble will go away for you. Lower SA tax implication. So currently, you would be taxed at 45% in your personal capacity on profits made from your properties. If you move it to this structure, you will be taxed on a foreign dividend, which comes to a 20% tax on the foreign dividend. So there's a tax saving. The management will be done centrally. It will be out of your hands. Additionally, houses can be acquired from the overall increases in the loans that we'll get. That will increase the profitability of the portfolio. There will be no monthly mortgage payments for the investor. So the project will pay the mortgage payments. And non-performing houses can be sold and replaced as well to also ensure that we keep our profitability up in the project. Disadvantages, quarterly dividends paid. So dividends will only be paid per quarter. You are now not the sole owner of a property anymore. You're a shareholder in a company that owns the property. Houses with no loans will now have loans attached to them. So we are gearing up the portfolio to attract additional funds so that we can buy additional properties. And there could be a possible tax implication, as alluded by Todd Baldwin, although this is mitigated, and that we think the impact of that is very minimal. So conditions for us to proceed with this product. We need to do a survey to conclude and establish how many people would want to participate. As mentioned, we would need a minimum of 40 houses for this to make it viable. And the financing and the structure would still need to be approved by Bridge Capital. We are in a very advanced stage for them, and they have indicated verbally that they would definitely be interested. We're just waiting for signed documents back for them. Okay, high-level timelines. Our plan is to get the letters out early in June to all the current owners of houses, then give all the owners time until the end of June to indicate whether they want to participate or not. At that point in time, we'll be able to establish if we have the minimum 40 houses. If we then continue with it, we have more than 40 houses. Our properties will be transferred in batches during the months of July and August, might even go into September, dependent on how many people we have participating. Loans to be repaid as the properties are transferred. And at the end, we will then issue the shares in Hassle-Free Limited. Okay, thank you very much. So, Yanni, I'm going to hand over to you to talk us through Wealth Assist.
Hi, everyone. Good evening. Yeah, we decided to really ramp things up in terms of client services. Unfortunately, as much as we would love to, we can't have this as a free service anymore because we have people that we need to employ specifically for this. So I think everyone's heard the term "we hold your hand." It's been mentioned in very many of our webinars, seminars, when you purchase property. So what we've tried to do is to actually create a product where we can really hold your hand and step up our service and customer service and to help you forward. So what Wealth Assist will be, it will be a comprehensive service to investors with limited liability companies or corporations to assist them with the day-to-day management of their investment vehicle, which is the LLC or the C corporation, and the investments held in those investment vehicles that they've purchased through Wealth Migrate. Sorry. So in terms of the services, we understand that there are people that only have commercial investments, and the work involved in that is a little bit less than than what it is when you own actual residential properties, and you need to include property management. So what we've come up with is we want to split it into two packages, a black and a gold package. The black package is where LLC investors with residential investments or LLC investors with residential and commercial investments in those investment vehicles will then go for the black package, and it's a comprehensive package that will assist with your management of your investment vehicle as well as your commercial and residential assets. In terms of gold, that is only for investors with only commercial investments in the investment vehicle, LLC or C corporation, and it's a comprehensive package in terms of what you'll get management on your investment. So in terms of what the services will include on the black package and the gold package, you will get a property portfolio report quarterly, as we do now with the medical stuff, but it will be a little bit more comprehensive in terms of where you are with your entity, your structure, your actual investments, calculating your returns over your whole portfolio, and not only for one individual investment. We will also be helping you with your entity and structure, reminding you that the LLC needs to be renewed if you want to add or remove members, and even dissolving the LLC at such a stage as you want to do that. In terms of tax, we have a lot of people that ask us to assist them with the tax questionnaires, so we will complete that on your behalf. And then if you've got any queries in terms of the scope of services in terms of tax, we will then manage that with our partner Baldwin Accounting. Any supporting documents that they require, we can send to them if we have that. Submitting final tax returns, and then also in terms of withholding tax on mainly the commercial projects, then also any general queries, and also postal service. So any post that we receive, will be scanned to you and sent to you, or if it's something of real value, then we will actually post it to you via registered post. So that's for both. And then in terms of the black package, we add property management, which is maintenance, help with rent-ready bids, vacancies, new leases, updating you on those, outstanding rentals, evictions, bank details, changes of any bank details. It happens quite often nowadays, so that's actually a service that we're going to have to start doing to some of our customers. Any owner statement queries, insurance claim queries, or if there's an insurance claim, your house might have burned down, we will help facilitate that. Property tax queries, any W8 or 9 forms that need to be completed and signed, your 1099 forms for your tax submission that you need to receive from the property managers, and any resales. Also the setup of your ACH draft, your online access, your statement queries, and if you want to pay off your mortgage, we can request that and assist you with that. Then in terms of our fee structure, what will it cost? That's the most important thing. It's payable via ACH on the first day of every month. So it will be ACH, it will come off your LLC bank account, and therefore it's a tax deductible expense, so you can submit it with your fees and stuff. You will receive a monthly invoice from us, just so that for record purposes. So in terms of the black package, it's $40 monthly fee, and that includes 2 residential properties and 2 commercial investments. If you own more commercial investments or any additional residential properties, it will be $10 per property per month additional, or $5 per investment per month. Then if you move over to the gold package, as it is a little bit less work because you don't have all the property management, it will be $20 a month, and that includes 2 commercial investments. If you have any additional commercial investments, then there will be an additional fee of $5 per month per investment. And that's, I think, Wealth Assist in a nutshell. If you have any more questions in terms of that, you're more than welcome to give myself or Lani a call. We will be sending out with the investment or with a letter next week. We will also be sending out the brochure so that you can actually see exactly what's happening with Wealth Assist. So if you should select that option, you at least have that knowledge. Thank you.
Great, thank you, Yanni. Thank you for that. And with that, I hand it back over to Scott to take us to DIY.
Yeah, so guys, I'm going to just, because there's a lot of questions coming through, and what I think would be easiest is let me just kind of go through it quickly. So please tell me if you can see my screen now.
Yep.
Okay, so in simple terms, you know, we've been through, Jacques' been through the hassle-free, Yanni's taken us through the Wealth Assist. I'm now going to take you through the DIY, and I think really in terms of the breakdown, in simple terms, the hassle-free is taking the residential property, putting it onto the platform, and allowing people, quite frankly, to get rid of the hassle-free. In terms of the Wealth Assist, it's people who want to keep their property. Yanni wants to continue with the team to be able to provide a professional service. The whole mindset we've always had is the private banking service to really be able to deliver it, but we can't continue ad nauseum. There's no, you know, every single one of you that's on this webinar is a successful business lady or businessman, and understand that, you know, it costs money to have people, and that's really where DIY comes in. There are people that neither of these options suit them, and that's fine. And in terms of where they are, so our DIY option is really quite simple. Yanni alluded to it. You know, we've actually got a team of people that are full-time just assisting clients with their management issues, with LLCs, with tax, with bank accounts, and with generally other stuff that takes place. And you know, I joke, but you know, when I you know, I bought this house that I'm living in now, that I'm, you know, coming live here from about 4 years ago, and you know, when my you know, my tap leaks or something, I don't get hold of the lady from Engel and Volkers and actually, you know, ask her to come and assist me. Now, granted, we said we want to hold people's hands, and granted, we want to go on a journey, but we've also got to be realistic of what is possible and how we do it. And we fundamentally believe that we would rather have fewer clients and be able to help them better than be trying to run around ad nauseum. The other thing is that on a regular basis, we've got people flying to America to go and solve and get things set up, etc. And it's not feasible to run a business where there was never any fee charged. We did it on purpose with the intention of helping people invest and grow portfolios, but we've also got to be realistic and put a line in the ground in terms of it. So for those people that don't want the first two options, no problem. The DIY option is available to them. So if they don't want to use the team, and like I said, that we, you know, in the mindset of a kind of private banking Wealth Assist, there's no problem. But the team also won't be able to be there to help on a consistent basis, doing absolutely everything, and most importantly, generally being the go-between. And you know, when the bank accounts close, we get on an airplane and fly to America, go and sort it out. You know, people will then need to fly to America to sort it out themselves. I think just from a cost perspective, you know, we did actually look at it. It's probably going to cost us a lot more money. We're going to run it as a loss leader, but at least that it goes towards paying the operational expenses and allowing us to have people that can full-time really, you know, deliver a good service. At a simple level, we've actually modeled it on Ozinvest. It's one of the most successful companies I've ever dealt with. They had 1,200 clients under their leaseback program, and they effectively charged $60 a month. And their slogan was less than a cup of coffee a day. And the slogan was, you know, we'll take the hassle away for less than a cup of coffee a day. And they really did. You know, my clients that invested with Ozinvest were extremely impressed with them, and it's really modeling on what they've done. One thing that's important, which we're also copying from Ozinvest, is that, you know, it's one of those things that it doesn't necessarily make sense while it's all 100% working, but it's only when it stops working that now suddenly you want Johnny and the team to help. The way that Ozinvest got around that was that if you, at any point, you can pull out if you want to. You're not signed into 3 or 5 or 10-year contracts. You can literally cancel with a month's notice. But what's also important is once you exit, there's no way to come back on unless you, in Ozinvest's case, unless you actually bought a house. In our case, it'll be unless you invest another $100,000 in any of the Wealth Migrate deals. So it's easy to get on board. It's easy to stay on board. But should you exit because you choose to exit and problems come your way and you find actually that the team is doing a huge amount of work behind the scenes, then unfortunately, please understand that we can't be chopping and changing. It's important people make the right decisions for obvious reasons. And we're here to help, and most importantly, we're here to help when there's problems. But it's got to be fair and sustainable in terms of where it is. So from a summary perspective, what's important, I tried to just summarize this late last night. So for me, if I've effectively got 3 different columns, you've got hassle-free, you've got wealth assist, and you've got DIY. So at a cost level, the hassle-free literally has no costs. The only cost is to close. Is to close the LLC and finalize on your tax. There's absolutely no other cash out of pocket. The wealth assist has the ongoing monthly charge, like we discussed, and then the usual other costs that you're used to in terms of owning a property in America. And then obviously under the DIY, you determine that. Some people tell us that Wealth Migrate RPS is not doing a good job. Some of us tell us that John Herbert's too expensive and that Todd Baldwin's too expensive. That's perfect. Under the DIY option, you've got the option to use any any lawyer, accountant, or service provider you choose in America, and so you'll determine that. From a hassle perspective, the hassle-free obviously is nil. That's the whole purpose of it. The wealth assist is really helping with all aspects of owning a house, very similar to a private banker. So I've got private banking through Standard Bank, which is not saying a huge amount, but at least I was dealing with one person, and when something goes wrong, that man can't necessarily solve everything, but they can certainly be the go-to point in terms of getting stuff done and really kind of providing that overall service. And then again, under DIY, the hassle will be up to you to determine. From a platform perspective, the hassle-free, you're completely able to manage on the platform with the other investments, so it's no different to Medical One or Medical 7. Really, for me, it really goes in the genre with, one of the reasons I've been selling my residential properties all over the world is because actually, having my investments on the platform, for me personally, is an absolute no-brainer and makes it a huge amount easier. From a wealth assist perspective, my understanding, and Michiel or Yanni or anyone jump in, but my understanding is it will still be separate from the platform, but again, with that specialized service, and then the DIY is not applicable. At a finance level, the hassle-free, it's interesting, when one of us has a house, we deemed as someone trying to get a residential mortgage, and we deemed as a foreigner, or as the Americans call us, aliens, trying to get a mortgage, whereas once we package them all together, it now starts to be looked at as a commercial loan, and you get much more favorable rates, which I think Jacques already went through. At a wealth assist level, we do have bulk purchasing power, and so there's just the ability to like Yanni and the team have been doing on an ongoing basis, and then I think DIY is self-explanatory. On the management side, the hassle-free, there is none. It's literally, there's not a single house you have to worry about, not a toilet you have to worry about, nothing, not a vacancy, nothing. From a wealth assist perspective, we want to be that go-between person, and so you will obviously be dealing with someone at the Wealth Migrate team, but hopefully we'll be your go-between with people on the ground. Again, DIY is for your own. Tax and structuring, my understanding is that one of the major reasons we've done this is that it'll all be on the platform, so it'll be just like all the other investments, a lot more tax efficient, really minimizing the structuring costs, whereas the wealth assist will be the expenses you're used to in terms of the annual hassle and etc. And then the DIY is the same. Liquidity, for me, this is an interesting one. Lo said yesterday when we were having a setup meeting for this event, there's not necessarily huge liquidity in the secondary market yet. I would agree it's not as liquid as the New York Stock Exchange. But if you go on a website called Property Partners in England, there people are trading in and out of residential properties with as little as £50. We do believe that this will start. It will probably start slowly, but it'll certainly create liquidity for people to be able to exit their residential positions. And like Jacques mentioned, it also makes it more favorable for something like a REIT to come along and purchase versus the individual properties. At a wealth assist level, it's only if you can sell the house individually, which obviously, there's people on the ground, but we can't guarantee that. You're working with partners on the ground, and then the DIY, people would be on their own. And then lastly, just on the return side, we've specifically done this and really worked hugely, very, very hard. Please understand that from an IPS perspective and a Wealth Migrate perspective, this is not something we're doing to make money. Quite frankly, it would be a lot easier to help people invest in another medical building but what is most important to us is our relationships with our clients and ensuring that we look after our clients and that we do the right thing in terms of the journey. And so, Michiel and Jaco and Yanni and Jakes and Lo and Jacques and, who else am I missing there? John and Todd and everyone have worked so hard to really kind of, what's the word called? Sharpen the pencils. I know we're going to get into the questions and talking about Scott Gruber and even taking, finance charges, etc. But there have been fierce negotiations, and it's why it's taken more than 12 months to try and get the highest return possible for the hassle-free. The Wealth Assist is as people are aware, and then the DIY. Our belief, just from having helped over 2,500 people do this, is that it's very difficult long distance, and those returns will be affected. So, in conclusion, I think that, people will be having different things going through their head, like, how do I protect myself? It sounds too good to be true. It's too complicated, too expensive. I don't know how, time and effort, need the right structures. I don't have the time, ongoing management issues. And I think really what's important is that for us, I come back to what our 3 core values are. When I started IPS, it was very much on the principle of Zig Ziglar, which is you can have anything you want in life if you help enough other people get what they want. Well, we're very clear that the people have the same needs that I have, Michiel has, and other people that own residential property, where we want to take the hassle out of it. They want to get it onto the platform. They wanted to get it working like many of the commercial assets. And I think what's important is that when we look at our 3 core values, the first one is trust. So, can people trust us? Because we believe that this is the most important component. And, again, can we make the banks give people mortgages? No, we can't. Can we make the management agents be better at communication? No, we can't. But what we can do is fix the problem and come up with solutions. So trust is our very first one. Transparency, there's complete transparency. Yanni mentioned it. If people want to delve into the detail, look at the models, you can understand it. We've got nothing to hide, and you can really clearly understand what we're doing and also why we're doing it. There's no catch. The bottom line is we want to help people move onto the platform. I showed you our mission statement right back to 2004, which was to provide an enhanced technological solution. We've now got it while our clients continue in pain in an old methodology when we've got a new methodology that's working. And then alignment is continuing to make sure we're aligned. We feel very strongly, there's many companies out there that would say, good luck to you. Go speak to Delta Airlines. Whereas from our perspective, we're aligned. We're long-term. We want to build relationships. We want to keep looking for solutions. We don't have all the answers, but we certainly got perseverance to find the solutions. And then one of the things that a lot of people aren't aware of is internally as a team, we've got 5 core principles. I'm only going to talk about one of them, but it's do the right thing. There's been plenty of conversation over the last 12 months. Why is this taking so much hassle? Is it defocusing, the current team, etc.? And for us, we felt very strongly that ultimately you do the right thing. And the right thing is to look after the client and provide them with solutions in terms of where they are. So just at a operational level, our deadline is by Friday, the 30th of June. There's going to be lots of consultations, lots of back and forth. The rest of this webinar will be around questions and what people are looking at. But ultimately, the intention, my understanding from Michiel and the team, is that really in June people need to make a decision so that they can then decide. If they're wanting to go hassle-free, then they can sign the agreements and agree that they're going that route, and effectively the process would start in July in terms of moving the properties over. If they want to go Wealth Assist, then that's fine. They would sign the agreements, they would set up the debit order, and again, the services would start in July. And if they want to go DIY, that's fine as well. And effectively, Yanni and the team will hand over the responsibilities back to the client as of the 1st of July. So in conclusion, I really just want to leave you with a couple of thoughts. One is that many of you have seen me present around the world. I've spent the last 20 years of my life trying to really marry together technology and property. The old system with many different brokers and middlemen is flawed in many ways. There's fees all the way through the process. And we can't change the old system. It is what it is. It's one of the more older and archaic systems in the world. We went out there to endeavor to build a platform to provide a better technological solution. And I remind you of those words: one-stop, enhanced, personalized service, IT, transparent, efficient platform, creating massive value to clients, transparency, value, trusted solution, and the online investor. And really what we've also tried to help people do is move up the value chain with far smaller amounts of investment, literally as little as $1,000. And we break it down into two products: our income and our growth. Our growth are new developments, our income are existing properties that are earning a rental return like existing houses. So this is the sector that it would fit into in terms of where people are. And why this is so important is that over the last 3 years, it's fundamentally shifted now. You can literally go online, you can manage your whole portfolio in a couple of minutes. You get access to the partners, and you can also invest from as little as $1,000. You don't have to worry about the hassles, the management issues, the complex global tax structures. You can really focus on just the best returns. And I just wanted to share with you very quickly here. Where's my page gone? There it is. So I just wanted to log in because some people haven't actually seen this. It'll take me literally a minute. But I wanted to kind of just give you a view of my portfolio and why I'm selling a lot of my residential properties. And, for me, what's exciting now is that I can hopefully bring them onto the platform like we're doing. With time, we want to be doing this for England, for Australia, and for South Africa. But, I mean, this is my portfolio. It's on 4 different continents. I can go into my funded investments. I can go into any one of these properties and click on them. I can get all the reports in terms of where it is. I can manage my bank accounts, so I can fund my wallet and manage my bank accounts. I no longer have to rely on Bank of America or Wells Fargo or something that's out of my control. And then all my securities are listed on a regulated exchange, which is the Seychelles Exchange. So you've got complete transparency. You can see what the fees are. And if you know anything about a blockchain, I'm not going to bore you tonight, but it's also listed on the blockchain to give people complete transparency, and equally with time, it will give people a lot of liquidity. And so, for me, this is really starts to get like exciting stuff. There's 4 simple steps. You register, you select the investment, you transact online, you manage your portfolio. That's what gets me exciting, and it's why we feel so passionately about the hassle-free in terms of bringing people online. We also respect that there's people that don't want to be involved in putting their properties together with others, and that's why we have Wealth Assist. And for me, the last thing I wanted to share is that from a residential perspective, I think we've all, many people on this call have started to realize the performance of the commercial assets. And if you look here, I mean, this was Medical One. It was like, I'm talking cash on cash returns. So this is after all expenses, the cash on cash returns were protected at 8.3. Over 3 years, it's paid out 10%. This one was 11%, it's paid out 11.22. This one was 8.3, it's paid out 8.49. This one was 8, it's paid out 8.29. And I think the only reason I'm showing you that is that it's really important to realize why, even as a residential product, we're wanting to bring it together, we're wanting to turn it into a commercial asset so that we can increase and get people better returns. We also wanted to say that anyone that's not on the platform and wants to go on and sign up in the next 24 hours, we'll actually give them a $100 voucher so that you can, as a client of ours or someone we respect and someone we've been on a journey with, we want to give you a voucher. My friends always say to me, what's the catch? The catch is very simple. Uber used to give out vouchers for free rides because once you had tested it, you'd realize that there's a far better way to get a ride around town versus a yellow taxi. We fundamentally believe with the platform now, that same option arrives, and why effectively the hassle-free becomes so important. And equally, for anyone who's interested, if you do register, you also go in the competition to win an apartment in the tallest building in Africa, in Cape Town, one of the most iconic in Africa. And so, in conclusion, most of you will know that a bird flying on its own, in comparison with a bird flying a flock, can fly 70% further. And our vision really is to make real estate investing as simple as a swipe of a finger from as little as $1. And you'll all realize I've bought properties on 4 continents. It's not easy. It has its challenges. And people more and more so now today are wanting to get that hassle-free experience. And ultimately, they want to get access to the best investments and invest like the wealthiest people. And our mission with the platform is to really make it available to the 99%. And for those of you that join the hassle-free, if you think about it, other investors will necessarily be able to participate and invest in residential product with very small investment amounts, call it $1,000, which also creates that liquidity that we're talking about. And so, that's all from my side, Michiel. I know there's a huge amount of questions that have come through, and I just wanted to go into the questions and to answer them. I think the logic was we were going to try and stay online as late as we could, or as long as we could, in terms of being able to answer people's questions. I think, for me, the next steps are speak to your investment consultant if you want, ask any questions you want tonight, go online to Migrate, check it out. Please try and make a decision by the end of June. There are some pretty hard deadlines. If you really want the hassle-free stuff, move to the online environment. And most importantly, around the world, technology is disrupting industries, and it will and continues to disrupt the real estate and investing and wealth industry. And we really are staying with the trends. And in simple terms, if you haven't heard about the Kodak story, Kodak actually invented the digital camera, but they didn't see the digital disruption coming, and so they got killed by it. In many ways, IPS has got a long and very proud history, but technology is coming, and the platform experience is what people want. They want the hassle-free. They want the wealth assist in terms of the private banking, and that's why we're evolving to provide these solutions based on the learnings that we've created. So that's all from my side. I want to run through the questions. Michiel, if you're happy with it, I just want to literally start from the top and we work our way down.
Scott, we're ready to go. I think run with it, and we'll try and answer it as quick as we can.
Great. So while we're doing that, I'm going to put a couple of polls up so people can actually start to think with their minds. So the first one, Andrew Cooper asked, Jacques, what happens to the investors' growth in the last 2 years? I know, Michiel, there was a huge amount of debate around how does the actual valuation work? And I'd ask you to really kind of go into that detail because it's important for people to understand.
Yeah, Scott, we really had the two questions really at what price level we want to offer the investor its equity. As Jacques alluded, our current approach is the purchase price less the outstanding balance from bridge. We looked across the portfolio. There's definitely guys that will have made a gain. There's also guys that has made a loss. So in all, we found that looking at the pros and cons, and also we had a session with Todd Baldwin, specifically in terms of what is the tax implications. And we found that all in all, it would make a cheaper product that we then roll the equity in at purchase price. The converse to that is that if you have made a gain, you will obviously lose a little bit, but we think in the longer run we can actually show you that growth. So our current approach is to offer at the purchase price, and it's less complications, it's less cost. If we would like to offer at a fair market value, we'll see that there would be definitely, we need to really define how we're going to measure it, and depending on the method, there's a lot of cost on. So in order to save that, we think that the swings and the roundabout of this product after 5 years, as you saw from Jacques' perspective, you'll get the average gain out, specifically that you also have a diversified portfolio and you also have a geographic portfolio. I think in essence the average returns over the longer term will be to the benefit of the portfolio, and therefore we don't want to load it up. So that's our view at the moment. We'd love to have some participation in that. So during the next week, you as a homeowner will get a very clear proposal, and you will have a comment section there. And then our idea is, Scott, that depending on the reaction of the market, we will definitely listen to our clients. If we found that the majority of the people would like to purchase price, we'll reconsider it. But at the moment, having a chat with our CFO, our tax consultants, everybody, we believe that it's the fastest and easiest way just to offer purchase price. But like I said, we'll have an opportunity to re-establish or give feedback at the end of the month based on how many investors has decided to continue with this product. And like Scott alluded to, the deadline is going to be very strict by the end of this month coming.
I think, Michiel, a couple of other things that I took from the session we had yesterday internally was, one is that from a tax perspective, you know, once you, if you bought it for 100 and you sell it for 150, there's obviously tax consequences, and then it gets even more complicated around the LLC and dissolving the LLC, etc. So it's also not a case of what you're losing, but actually what you're gaining in terms of the efficiency, the speed, taking away the hassle factor, and ultimately, you know, providing for the longer term solution. So that was the one factor that I think is really important. And the other one, I know I'm repeating what you said, but I want to emphasize it, is that to go out there and to pay a independent valuer to do it properly would cost probably $1,000 to $1,500 per property, which is going to significantly, you know, increase the costs of the overall. And ultimately, it's going to really impact three things. It's going to impact the returns, because every component of cost we add on, we try to keep it as low as possible. Secondly, it's going to delay things by months. And thirdly, from Scott Gruber's perspective, there's been a huge amount of work done, and from their financier perspective and credit lines and everything else, you know, my understanding is there's been some fierce negotiations, but they're good to go. If we delay that 4 months, I've dealt with enough banks in my life to know that what they say today is not the status quo 3 months from now.
Yeah, and I think, Scott, thanks for alluding to that. Scott Gruber, obviously, we're the guy that has charged us the higher interest rate. So I think we use now for the first time really a position of strength that we want to, let's call it, group the loans together. It's not actually going to be a single loan. It's actually still going to be individual loan, but that hassle will obviously now be for Jock, our project manager, and his team in Atlanta. But I think the point that we're saying is that we really have actually now leveraged it down to 7.25. We made I think, a very good approach. What's also very important for investors to know that you're actually not having a loan on your liability anymore, your personal assets and liability for that matter. So we're very excited about that you actually now will not have to have that on your assets and liability sheet. So it means that you're actually getting a full-blown gearing without the liability, and paying 7.25 for that is the best that we saw people are getting at the moment, loans in any case, but you don't actually have to fill in any forms and do anything on it. So we're very excited that he's, last night he has agreed in principle that he will go ahead with us, and he's definitely ready to help us roll over all of these investments. He was also not specific about how we would do it. He pretty much will be our lending partner in this project.
Cool. So just you'll see there that I've put up the poll. I'm just it's not your final vote. It's just trying to gauge people's initial feeling based on what they've heard. So I'll leave that open for another minute or so. If you know, I can see that the majority of you voted, but if anyone else wants to. The next question was from Cliff. What is the rate of occupancy versus the unoccupied on the current book?
Scott, if my memory serves me correctly, the vacancy is less than 5%. I think, if I remember correctly, Willie looked at the portfolio snapshot of 55 houses, which is the same snapshot of houses of people in the poll that we ran last year, October. I must be honest, I think it's in the region of 3.5 to 4%. So we took the view that we want to make it more conservative, and we then modeled at 5% as Jock alluded.
Cool. And just one thing you didn't make specific there, Michiel. If I've owned my house, let's just say it's $100,000 and I've got a $50,000 mortgage, but I've owned it for 3 years and I've been paying down that mortgage, you take the capital amount that I've paid down on the mortgage as well. So it's the purchase price plus that capital amount, huh?
Yeah, so Scott, if you had to purchase a house of 100,000 Rand and $100,000 and you had a loan of $50,000 and you paid it down that you only owe $40,000 at the moment, we're going to effectively give you $60,000 worth of shares in the platform, and the $40,000 remaining loan will be, let's call it, cancelled by bridge loan, And then what we are doing on the Wealth Migrate side in the product, we are resetting the loan to 55% of loan value. So we're starting with the loan again. And for those that you've made the sums already in your head, we're actually going to have surplus cash in the project. And what the intention is, we're actually going to use that cash to actually buy additional properties. And then another thing that comes with that is obviously in the longer term, we are going to do proper portfolio management of these properties. So that basically means if we found a bad apple, maybe the occupancy is bad or it's in the wrong area, we're actually going to prune and replace that property. So we're really going to make this a proper asset management and trying to sweat this asset. The better we can get this asset, the more attractive it will be to exit. And Scott Gruber already alluded to that he definitely have people that would be interested in this portfolio if we clean it up and make it nicely and stabilized. So yeah, we want to get that vacancy down even further, but we've budgeted that at 5%.
And also to get the management agents to sharpen their pencil, because while we've got a couple of hundred people, you know, as individuals, when effectively we're one client, we get to decide who manages our properties, and we can obviously negotiate on the management charge per month.
Yeah, that's what I alluded to also, Scott, in the presentation. So currently the management agent charges a 10% fee, and we're going to negotiate that down to 8%. So there is definitely going to be that saving there.
Which for those of you who know the people we deal with, that's not going to be the easiest job in the world. Mark asked the question, why 7 years and longer interest if the exit is 5? Mark, the logic is we want to exit with 5, but we don't want to you know, have our money running out in 5 years and 5.5 years. I mean, Mark, you've known us for a long time. It's always about managing the downside, you know, protecting for the downside, and equally with the word and mindset of safety. And so the logic was we negotiated for as long as possible with Scott. I know Michiel actually wanted it longer, but he eventually said, you know, 7 is fair if you've got a 5-year view. I don't know if there's anything I'm missing there, Michiel, you want to add?
Scott, you're 100% right. To answer Mark in another way is that when we plan exit on 5 years, I think we're very clear that we have let's call it an optional extension period or an optional reduction period, and it's really going to determine if we get unsolicited offers that make sense, or if we don't have offers and the actual market makes sense to hold it a little bit more. Let's say, for instance, the market has really run, we'll definitely come to the investors and ask them their opinion. So we just want to make the room, very specifically, we want to keep the interest rate as low as possible, because you can see there's a very nice kicker for bridge loan after the 7 years, and so it actually really encouraged us to make sure that we don't prolong it too much, but we just want to have that wiggle room.
What happens if one's medical 2 and 3 investments are held in the LLC? Can these be transferred into one's own name?
Can I go ahead and answer that one?
Yes, thank you, Todd.
Yes, you can have that go into your own name, but if it's a disregarded entity, LLC, there's really no administration costs to carry that forward. So there'd be no reason to put it into your personal name, although you could. That's certainly an option. If you're a partnership LLC, then you would probably want to keep it in that partnership. It does change the withholding perspective, because the holding company or the medical center, if you are now a disregarded entity, will have to withhold taxes, which we do for those anyway. So, but certainly, yes, if you do have that option, if you do transfer the LLC of the medical centers into your own name, you're still going to file a tax return here in the U.S. And the difference is between whether it's a disregarded entity or a partnership.
I think just Michiel, just clear that up in terms of, because I think what Mike would be asking in that question is, you know, how do I make it as simple as Medical 5 as an example on the platform, if I'm understanding it correctly?
Yeah, I think, Scott, we've been talking to our commercial investors. If you're in the case where you have residential and commercial, the idea is that systematically our recommendation, and I know we can't give advice, Jacksonville probably should be, but a potential option for investor would be then to systematically new investments do it on the platform. The existing commercial investments will then run its course. The first one, can you believe it, Scott, is already 2019 coming to fruition. So the idea would be run out your commercial investments in the LLC and then do all your new investments on the platform so that you will just phase over to the platform. And we believe in a longer term, unless you have a specific personal reason. So I know one or two guys that is actually immigrating to United States, or they want to send the kids to college. It's really your own circumstances. If you have a very specific reason for the LLC, there's absolutely nothing wrong with the LLC. That solution is still perfect for that. But the only thing there is you have to scale that solution, and you must really use it properly so that the cost in relationship to your return makes it worth your while. But if you're a smaller investor, I think the strategy would be very clear. Just do all your new investments online.
Dieter asks, what happens to a property that has no tenants at the time of transfer?
Scott, we anticipate some of them would be that, so there will be no penalty. The understanding is that obviously we will use our muscle to really focus to get that leased up, but there should be no detriment. We also will look at the properties like we said, and that if there's a history of a property that hasn't been tenanted, it will definitely be a candidate to be sold off and replaced. So we are planning to, like I said, sweat the assets. But I think the idea, Scott, that like we said very clear, we would like to help and accommodate as much of our existing clients as possible so that they can get onto the platform.
Yeah, and I think also it's a swings and roundabouts thing. You know, in the modeling, we've got a 5% vacancy across the portfolio. Today, the one property might have a tenant. Tomorrow, it might not. You know, so it's within that threshold of the modeling. Robin has asked, I'm surprised Bridge is charging 3 points for the new loan origination. I know, Michiel, we spoke about this yesterday. And Robin says that most banks charge 2 points if they're starting from scratch. Would you mind just referring to that? I think it's quite important.
Yeah, I think what we have really tried to do is actually move the guy that's really been asking a lot more interest down to a point where he can also create a possibility for him also to earn money. So our principles has been very clear that we would like to create a win-win partnership for the investors, for our lender, and for Wealth Migrate. This principle has really been the core resounding principle, which I think Henny and Scott started the business, and you've seen the results with the medical portfolio, which runs on the exact same principle. So if we screw down Bridge to such an extent that they're not interested in, we will actually not have a lender, and then this product will actually not happen. Because at the moment, like you saw with the banks, it's actually a real art to get a lender to have a bulk loans for foreign investors, and that's why we have really worked over. Myself and Jaco started in Austin, Texas in April with Scott Gruber. We had about 7 conversations still last night to actually convince him to do this. So on the one side, we can screw down.
Sorry, Michiel, don't forget me flying there in August last year when you and I went over. You went to Austin, I went to Memphis, if you remember, and I went to sit with them. I mean, this has been more than a year, well, since July last year. It's been a work in progress.
Yeah, so I think if I look at it in essence, most investors are breaking even, and we're basically now removing their liability, removing all these costs, as you alluded to, and we actually now going to aim, we really aimed and we pushed them hard to have an above 5% return on the residential portfolio. And I think we've achieved that. So I think, yeah, these are the things that we have to pay to get to this point.
Cool. I'm gonna do rapid fire. There's lots of questions here. I'm just gonna quickly go through them. So Denise asked, when are you going to make all the info available? Someone's already replied, but I think it's good for everyone to know this. They're going to be sending out portfolios. Sorry, let me rephrase that. They're going to be sending out the information on all the properties with regards to, so people will get access to it. So, I mean, the answer was, yeah, we're sending out proposals for each property with a brochure. So that was that one. Need to define, so from Denise, need to define a package rate for commercial, multi-units, and residential. Not 100% sure, Denise, if I understand the question. I'm not sure if anyone else does.
Scott, I'll deal with Denise tomorrow. I've got a session with him on that topic. I think it's fair to say that each individual house, if you own 3 houses, you're going to get 3 proposals, each addressed to your house. And you must choose if you want that specific house into the deal. I know of 1 or 2 investors that might split their portfolio, but that's their choice. So we want to send to each and every house that's in the portfolio a proposal, and then we want an answer on each specific house back. And that's the point that we want to reach by the end of the month.
Okay, so you're meeting with Denise, so I'm going to just cover the ones that are relevant to the group then. What he asked here, what are the costs associated with DIY? They're nothing. It's like IPS and Wild Migrate were blasted off the face of the planet and we don't exist. And you get to deal with whoever you want in America and fly over there to sort stuff out when you need to. They're nothing to us. So you don't pay us anything. So it's really time value of money from your perspective. There's a number there about selling the property and the price. I think obviously we went through that a little bit earlier, and Denise and Michiel can go through that. How realistic is the possibility of a REIT coming along to buy up this opportunity? Andrew, good question. I think there's 2 parts to it. One is that it's certainly a very common practice. We're not only dealing with Scott Gruber, Michiel and myself and Jacques and Willie have been dealing with an organization out of New York that are actually looking to put our underwriting fund together. I don't know, Michiel, if you're allowed to share, but they're actually going through a whole transaction at the moment. As you know, Blackstone bought up $44 billion worth of single-family homes. So it's very, very common for the REITs to buy single-family home packages. So yes, is it guaranteed? No. But the bottom line is, if you've got a performing package, there's definitely people in the market for them. Michiel, please, or anyone else, jump in if I'm saying anything wrong. I'm just trying to run through it from a time perspective. What about your 4th option? Provide service to sell residential property and invest net income in other investment platform. Yeah, so Robert, I think that's an option, but again, it's not guaranteed. We're not on the ground. We can shout and scream at RJ as much as we like. We can't make him necessarily do something. So the 3 options that we're providing are in our control, with a service in our control that we can deliver. We can't give options that other parties necessarily will promote. We believe that the hassle-free is the best option to get liquidity in both the short, the medium, and the long term. Mike said, I like the hassle-free. But what about the commercial? Okay, so I think we answered that. Denise said, what happens to RJ? Nothing. I went personally to see RJ 3 times. And Denise, I think you were even one of the people that sent me his reply when he got a bit excited in December. RJ is a funny guy. I'd call him a good friend, but he's one of those guys. He has a mood swing, and some days he's hot and some days he's cold. We've spent plenty of time between Michiel, Jaco, myself, sitting down with him and actually explaining to him that this long term is far better for him, not just with the IPS clients, but with all his clients, because it's also where the world's going. So, but people are resistant to change. It is what it is. But we're doing what's in the best interests of the clients, not what's in the best interests of RJ. Although I have no intention of losing relationships. Medical, commercial, outstrips the residential return. Personally, I'd like to swap for medical in a heartbeat. So Andrew, we understand. And again, that's why we're looking to create solutions so that we can do it. I'm in your boat, Andrew. I nothing to do with IPS even. I own properties in London that have done fantastically well for me. And yet, over the weekend, I had the hassle, I had telephone calls, the bloody boiler broke in the one. What was the other one? They wanted to know the Sky password because they didn't know it on the other. And then the third one had a leak in the bloody toilet, all in the space of like 3 days. And I started thinking to myself, wow, my commercial buildings don't have that hassle. So even my London properties that I love so much, you know, I want to bring into a hassle-free product. So, Michiel, as soon as we got this sorted, if we could have hassle-free London, I'm all in. Can you share the presentation at the end of the webinar? No problem. Denise, we will be hiding stuff. This is obviously private for clients, so it's not going to be put on public YouTube or public SlideShare, but we'll certainly create an environment, probably a data room, where people can just get access to the information. Robert said, how does this impact investments in Medical 1 and 2? Do we need to choose between Wealth Assist and DIY? My understanding from what Yanni presented is that if people want to really just look at running their LLC and stuff, you know, people that are doing commercial, Yanni, just correct me, I can't remember, you had 2 options. What was the color of the one option that was just for commercial investors?
Scott, it's gold. And in terms of what Robert asked, with Wealth Assist, you will still be, with Wealth Assist, you'll just get an overall portfolio and we'll help you with the LLC management. But you'll still get the quarterly distributions and those reports, because that goes out to all our investors. That's something that we do. But you won't get the LLC support if you don't go with hassle-free on the commercial stuff. But you'll still get those reports and things.
Cool. Okay. Sue Styles got a question here, which Yanni, I'd ask you to, it's more of an individual one around their personal portfolio. So if you could please get back to Sue, or even if you just want to answer it personally there. It's around their different commercial investments, including the Australian one, and how that would work in terms of the LLC, etc. Chad said, thanks for simplifying this, much appreciated. I appreciate the kind words, Chad. It's been a lot of work, and I love the game that we sometimes play, you know, the what if scenario. And like I said, more than a year ago, we played a what if game. What if we could get all our clients' properties onto the platform in the US, the UK, Australia, and South Africa, and make their lives hassle-free? And I think tonight's quite exciting. Some people might not think so, but we do, in terms of really trying to make their lives hassle-free. Sharon has asked, will we be able to transfer medical investments? So I think this is a question coming up and up. I suppose what we'll do, Michiel, is maybe we do it like an FAQ where we'll take these questions, and where there's regular ones, we'll answer it around the medical investments out of the LLC, etc., and give the 3 options you just mentioned earlier. Yeah.
Yeah, I think we'll add that into the proposal that's coming out. So look out for that next week. So currently, I think we're very clear we're not planning hassle-free for the medical guys that's in the medicals through the LLCs. Strategy is very clear. We're going to run them out, and then new investments we'll do on the platform.
Okay. Dieter says, personally, for me, it's a no-brainer, all things considered. I think Dieter is very similar to me. If I can remove hassle in my life, then it's a no-brainer for me as well. And to earn a better return, it does, yeah, it makes a lot of sense to me personally. Valdi's put their growth of 4 years. Valdi, I'm not sure the question. Either reach out to me or Michiel. You've got both our numbers if you want to just WhatsApp us. Thanks, Mark, for the kind words. Why can't I do both, e.g. DIY for existing hours, Wealth Assist, and hassle-free? Mark, my understanding is that, like Michiel said earlier, we're going to send it for every property, and people will actually get to choose. My preference to people would be make a choice once off for, you know, as an individual, make a choice for all your properties, so that, like, just from Yanni's perspective, the team's perspective, we don't want these 2 properties are for that and these 2 properties aren't, because trying to manage that would be a nightmare. I don't know, Yanni, if you've got any thoughts on that, please jump in. I haven't thought of it like that. Dita asked, is the purchase price the list price you bought before commission and other costs? I think, Dita, the idea, and again, Michiel, tell me if I've got it wrong, but if you bought it for $100,000, whatever the actual cost of the property was, $100,000, that would be the price. In America, there's very few additional costs. There's no such thing as real transfer fees, etc. So my understanding, Michiel, just to keep it simple, would be if the house cost $100,000, it's the $100,000. If you bought it cash, that would be taken into account.
Correct.
Who will you deal with local property management? So yes, in many ways we'll deal with the same people, although now we'll also have the buying power and the ability to, if they're not performing, to be able to say, well, we're going to move it, and not have to try and deal with 60 or 100 clients to sign documents and move over, because ultimately, there'd be one owner that'd be able to make those decisions. It's purchasing power. A risk with using purchase price that investors bought many years ago, and who have bought well. So Clive was just saying, there's a concern around the bias towards people that have properties that they bought years ago, whatever, want to keep. I think Clive, Michiel mentioned that. Let Michiel and Jacques know people's thoughts. We're a company built by investors for investors. We all ears, but we also want to make sure that everyone has all the facts. And there's also, like everything in life, there's pros and cons. And we believe that we've done a huge amount of analysis and looked at all the different scenarios, and that this is in the best interests of everyone who wants to participate. So Gail saying, we've already paid raising fees for both Bridge and Wild Migrate. Now we're paying these fees again. Look, from Bridge's perspective, yes, Gail, because we are consolidating the mortgages. For Wild Migrate, no. And again, it's, whether we go to Bridge or whether we go to any one of the other 8,000 banks, when we consolidate the financing structure, there is a setup charge. And like Michiel said, we've negotiated as hard as we can, but it is what it is. Can we get a copy of the slides? Definitely, Mike. We'll send them through. With regards to Memphis, you only have 37 houses, but need 40 in a similar structure. How are we going to get the required number without additional investors? We're going to have the total portfolio, Gal. So there's over 200 different properties where people will be able to participate. And again,
just want to come in there. We're going to start in July with Atlanta properties, but there is clients that obviously got Texas, Memphis, and Oklahoma properties. So what we are going to do with those properties, Bridge is coming back to us later this week. There's a good possibility that all the other properties will be accommodated or not. The only exception that we foresee at the moment is that there's a time limit in terms of age of houses for Memphis specifically. But these are details that we as the team still need to work through. But if you own a property outside Atlanta, please also make your choice. We want to take that choice to Bridge, and then with our updated feedback session at the end of the month, we will then announce, hopefully, and I think almost 99% sure that we announced that we are going to do the other states as well. So we essentially think that we're going to be able to accommodate all the properties. The only, let's call it, working through at the moment that we still need to do is in Memphis, but it looks like Texas and Oklahoma is ready to go as well. But that is subject to confirmation with Bridge in the next 2 weeks. At the end of the month, we'll be able to announce additional phases as well.
Dita asked, just to clarify, the hassle-free LLC will have one big loan, or will each investor still have respective loans? So no, Dita, you don't have respective loans. It's like Medical 7. There's a mortgage over the property, but it's non-recourse and has nothing to do with you as an individual.
Sorry, Scott. For Bridge loans, they will actually still have individual paperwork because in the difference between a commercial asset and a residential asset, they securitize, in this specific case, per property. So we'll have a loan document per property because we cannot do a bulk property loan for all, let's say, 55 or 100 properties. So, but that's a process that's.
I think. Sorry, Michiel. Sorry, I think I understand that there's an individual kind of mortgage per property, but it's not. If Dieter's got his house in there, it's not against him. It's against the LLC. It's non-recourse. It's got nothing to do with Dieter himself as an individual.
Yeah, Scott, you're 100% right. And then the terms of the documents are exactly the terms that Jacques has shown us. So from that perspective, just the mechanics is that will still be individual loans, but we will administrate.
Dinesh said here, this sounds like cash buyers are negatively affected. Dinesh, unless I'm missing something, and again, I know you're meeting Michiel, but I don't see why. Again, if someone bought a property for $100,000 and mortgaged it $50,000, and let's just keep it simple, then they would be recognized with the $50,000 cash investment that they invested. If someone invested $100,000 and owned it cash, they would be recognized with the $100,000. Tell me if I'm wrong, Michiel, but that's my understanding. And so I can't see how cash investors would be, cash buyers would be negatively impacted.
Yeah, Scott, you got it 100% right. In the case of an investor that is coming in with cash, he obviously did not have a loan payment. So the only difference would be he's actually going to get geared up. So his returns are actually going to be geared for him, and there will obviously be a loan payment. So that's the difference. The next major difference is that he's actually getting an exposure on a higher value of property, so that 5 to 8% of capital appreciation, which Jacques highlighted, he will not have that on his 100,000. He most probably have that at $220,000. So he's getting the benefit of the leverage effect.
And Michiel, without the hassle of trying to organize their own mortgage. Okay, so that's my comedy at 20 to 9. But Richard said, when will you transfer the Memphis properties? Hopefully Michiel explained that. It's going to be a work in progress between the different states. But I know the intention is, Michiel, to kind of get the process going in July and try and do it as quickly as possible by the end of kind of September, October, is what we discussed yesterday. All going according to plan, huh?
Yeah, the idea is that we would like to wrap up this project in such a way that Todd will be able to early January close your LLCs. Todd, I think you mentioned it would be better and more efficient just to close it in January. So I think from a transfer perspective, there's no ways that we will run into 2018. This project is going to be a focused 3 to 4 months project to get things done. And we want to get it done in the calendar year 2017, so that the investors do not have the exposure of an additional tax year, hence the focus of getting it done in 2017.
Alex said, maybe Todd can answer this, but what would the tax implications be if we decided to sell the property?
Is the question if they sell it directly before transferring it into the corporation? Is that your understanding of that question?
I think the question is exactly that, Todd. You know, I got a property in Atlanta, I fly to Atlanta, give it to a local agent and sell it. I bought it for 100, I sell it for 120. What are the tax implications?
Yes, depending on your situation, whether you own it together in a partnership. If it's a partnership, the profits would be split 50-50. Most likely, you will have losses that you've had for all the other years. So they're most likely, in actually both cases, if you sell it outright or transfer it into the corporation, your gains will probably be offset by all the prior year losses. So I would expect very little tax implication in either scenario.
Okay, thank you, Todd. Andrew asked, who's the proposed management agent? Again, hopefully I've answered that, Andrew. There's no reason to move away from existing people, but they will be very tightly managed. And rather than us just being a third-party policeman, a bit like an English bobby with a baton, but with no real force, because all we could really do is go, hey, dude, you're not getting back in time. You got a vacancy. We can prove it to you. I mean, I don't know if anyone's ever seen the amount of work that Lani and the team are doing. that gave us all the power, whether we were dealing with RJ or the people in Oklahoma or Memphis or anywhere else. And but now ultimately this would change things where you would actually be able to enforce. So the idea of who's the best property agent, ideally it would be the current people, but being able to manage and hold them more accountable. Denise, I know you've got lots of questions. You and Michiel are meeting tomorrow, so I'm just trying to go through the ones that are relevant for everyone. Do you consider the total investment portfolio of the investor to give the best deal? Yeah, so again, I've got stuff via the LLC. I suggest you and Michiel go through that in more detail tomorrow. And Denise, my honest answer here is we're doing our best for what is in the best interests of the clients. It's a project we've worked on for more than a year. There's obviously obstacles and constraints that are out of our control. So what we're proposing is everything that is in our control and doing our best within the situation. Howard's asked who pays RJ's 6% sales commission in our contracts. I know, Michiel, we've had extensive conversations with RJ and about this. I'm not sure if you want to answer.
Yeah, Jaco Maritz actually did discussions when we were in Atlanta earlier this year in April. So the understanding at the moment is that when we are transferring the properties into the hassle-free, the 6% commission is not going to be payable. If you want to sell your property on your own, as Todd answered earlier, in your current master lease agreement with RJ, there is a 6% commission, and that will then prevail. But at the moment, our understanding with RJ is that when we move it, effectively selling it to the hassle-free LLC, that 6% will not be applicable, because in principle, he will still be managing that property. And to allude to the questions earlier, we are going to put in a proper SLA agreement. We're moving it into professional property management terms now, and we're going to be a very clear contractual agreement with performance clauses. So we're taking the whole property management to a different level because of the bulk that we have.
Yeah, Gail just said, why can I not see other people's questions? Sorry, Gail, it's just the way GoToMeeting works. We're not trying to hide them. I'm happy to share them if you want. I've asked every single question so far, other than Denise, where Denise is meeting with Michiel tomorrow. Mark said deadlines are too tight. I'll be overseas on holiday for 3.5 weeks from the 20th of the 6th. Today's the 6th, Mark. So that gives us 2 weeks to really do it. This is not about one individual, as I'm sure people can appreciate. What we can't do is have 99% of people agree by the end of June they want to do something, and then someone in September says no, they want to be part of it. It's too late. Like, things are ring-fenced, they get closed. One person can delay it completely for everybody. So in absolutely exceptional circumstances, I'm sure we're prepared to to find solutions. But quite frankly, there are things to take into account, but it's not that complicated, and people just really have to go with what suits them best in their requirements. It's why we've tried to keep it simple to 3 options. Okay, so the question here, I think Dieter's asked about the LLC again. So there's a big request here from people, Michiel, just so that you know, and John Herbert and Todd. Is there no other option for the commercial assets so I can close the LLC? My understanding is that the medical assets, as an example, have done really well from a capital growth perspective, and so to exit the LLC, if we would sell them, there's quite big capital gains tax. I don't know, Michiel, if you want to talk about that in any way.
Yeah, Scott, I think let's start with the residential side. So when we send out the surveys, please let us know your concerns. We've looked at it initially, and at the moment it doesn't make sense for us. We'll definitely relook at that if that is such a large request. But at the moment, it doesn't make sense for us to go that route. It's just the medical assets has done such a nice job, and if your tax losses is not great enough, you actually are going to make a loss. And then secondly, if we have to start rolling over the commercial assets and there's not enough people doing it, then the restructuring cost on the PCC side, or the IBC as we call it, that structuring cost will most probably offset your gains. So at the moment, our view is that it's not worthwhile to move the commercial assets unless we've missed something, but at the moment that is our view.
Got there two legal concerns.
I'll go ahead
and
add my opinion to that as well. I kind of look at the medical centers as hassle-free already because there's really no management. You're collecting a check every month. So I guess the only hassle is the bank account, which you know, there could be some options there that we could look at to pool those together. But other than that, the investments they're not like the residential where you have to deal with any management. They're being well managed.
Yeah, I think
Scott, the banking is difficult with the LLCs. However, if somebody were to cancel the LLC and request a personal account, in that matter, they must fly to the U.S. to set up their own account. There's nothing we could do to be able to help them set up a personal account. On the other legal issue is the banks, when they make these loans to these commercial projects, they look to see who the investors are in these projects, and any change in the investor mix could have some complications with the larger loans.
Yeah, and there's a great question here from Shane where he said, with the remaining medical investments, would we be able to arrange for the distributions to be paid into our wallets on the platform instead of a US bank account? I don't know the answer, Michiel or anyone else. It makes sense. I mean, it almost comes back to what you just said, John. If I could get paid from Medical One into my wallet on the platform, it might make my life a lot easier. So I don't know if we've got an answer to that. If not, we would have to come back and try and find the answer.
I think let's come back on that, Scott. It's not as simple as it sounds. Yeah, let's have a look at that. I don't want to make an opinion on that now.
Okay. Annalisa said, thanks for looking after my investments and evolving to solve current issues. So thank you, Annalisa. I really want to say, if anyone's feeling negative energy towards the team, I accept and understand that, even if it's specifically to me. But the one thing I can't overemphasize is the amount of energy and effort that the team's put into finding solutions to really take the whole investment to another level. Clive has said, presumably you'll send quarterly reports on medical investments to the DIY investors. Yeah, 100%, Clive. I mean, that will be continue as is in terms of where it is. So that doesn't affect. Tonight's webinar is about residential. Let's be frank. The commercial stuff, we're doing the reports, it's happening. We're in control of it, but we're not trying to chase an RJ to send us a report. It's already happening. It's already part of the process, or anyone else for that. So we're not bad-mouthing RJ, anyone in any of the other regions. Amanda said, would the properties be valued at current market value? I think, obviously, Amanda, we've discussed that in terms of the area and the way, in terms of the process. Indicative costs of closing an LLC, Colin asked. I'm not sure if we answered that. I know, Jacques, we spoke about it yesterday.
Todd, John, maybe just give a quick view on that.
Actually, the costs will be the same as they've always been. It'll just be a final return from a tax perspective. If we are going to try to avoid the FERPTA tax for disregarded entities, then there will be some costs to change the operating agreement and to make it a partnership during that period before the property is transferred. But that would be the only additional cost. Otherwise, it would be the same cost as every year. It would just be the final time that you'd have to pay that cost. There would be a small charge. For every property sale, there's an additional cost of $150 to properly calculate the sale. So that would be the only cost involved with closing it down. It would just be a final return, and that would be it.
And then, John, you will obviously just close down the actual entity and deregister the entity and your fee was in the region of $350, I think.
I believe there's a slide in there showing the range of costs. It depends on which state your LLC is in, because there are various filing fees in order to do the dissolutions. But I believe there was a slide in the deck that dealt with the cost of shutting down from a legal perspective. The range I saw, I believe all of the range was under $600.
Okay, Mike said, if I understand things properly, I'd put my residential into the hassle-free option, but continue to run the LLC on the wealth assist option under medical 2 and 3. I think, I think, Mike, the whole idea is, yes, to simplify things from a residential perspective, and really on the commercial side, it's just really to try and streamline it and make it easy for people. And this, again, tonight was primarily around the residential and really, getting this hassle-free option and available, and the wealth assist. Alex has asked, can any estate agent sell the property or owning RJ? There is a clause in RJ's contract where he has the right to sell it for you. My understanding is that you can get others in the market, but it would be a personal negotiation with RJ. It's one of the reasons why we spend a lot of time and energy with him, to make him realize we're not having a one-to-one conversation, we're having a one-to-many. And we need to do this properly. So that's why, as Michiel said, we managed to get that waived. Okay, so Andrew asked me, Scott, you originally said many times the 50-year average on US residential property was 9.75. Is this still the case? Have we got updated figures? Andrew, I can send you the Economist report. That is the long-term average in terms of where it is. And yeah, I mean, it gives you the long-term weighted average in terms of where it is. But I'd suggest looking back to the Economist, and the other person that's got a lot of research in that space is Dr. Dr. Roos, which is actually where I learned it from. Doesn't RJ hold contextual? Okay, so we've answered that for Dita. In Memphis, there's also sales commission. Yes. So Amanda, the whole idea would be, if there's a sales commission, put in there in the contract dealing with the partners. Remember, all the partners. The good news here, guys, is that all the partners are tightly close together. Whether you like that or not, it's a benefit actually. So Scott Gruber's company actually finances all of RJ's properties. Okay, like in terms of not only helping him on some of his own stuff, but also on obviously client properties. I introduced Scott Gruber to RJ, or RJ to Scott Gruber, so RJ wouldn't know Scott Gruber if it wasn't for him. The same in Memphis, the same in Oklahoma, the same in Texas. So we've got a lot more buying power with a Scott Gruber type person, because if the agents or management agents, whatever you want to call it, started to get a bit iffy, we could certainly put a lot of pressure from them from a business perspective if they weren't playing fair. And I don't know, Michiel, if I'm talking out of turn now, but it's one of the reasons why now's a good time versus trying to go to a whole bunch of different people, because you're dealing with a few people with vested interests, and ultimately that alignment thing comes into play now, because if people don't play fair, they can be taught that they must play fair. So Andrew, thanks for the kind words. Andre.
Maybe just a quick question on that. I think the experience across the portfolio that we've seen is that, in essence, RJ is actually doing a fairly good job. We have had one or two cases where things didn't work out. But I must be honest, I know one or two specific cases, but apart from that, he has done a good job. I've personally got houses which really hasn't had any problems. Not that that's any reason to go by, but I think, like you alluded to, Scott, is we're just going to do it more from a professional property management perspective than from an individual owner perspective.
And I think also the point is, this is not against RJ or people in any other region. It's got nothing to do with RJ. It's actually got to do from an IPS and Wealth Migrate perspective, and it really ties in with what Sean said. He said, thanks, good solution here. Also, we have always wondered how you were managing the residential hassles for nothing. We have always been aware that this was a gift from you. And, that's the honest truth, Sean. When I spoke to RJ a year or so ago, and we stopped helping people invest in individual houses until we could sort out stuff that was out of our control, like bank accounts closing, like management communication, etc. We did it on purpose because we couldn't, go and have another 200 clients invest in over a 12-month period, and Yanni's problems just balloon for free. It just doesn't make any commercial business sense. So we put a hold on it 12 months ago, and we sat down with RJ and we said, we've got absolutely no issue with you. We want to build a long-term relationship. Nothing's changed since 2012. However, we've got to get the hassle-free product working. We've got to get the experience onto the platform, because then it's scalable. Then we can do this and allow you to do what you do, you to be good at what you do. I mean, my dream with RJ and or anyone else is that their systems are digitally integrated into our systems, the reporting becomes seamless, and ultimately you've got, I don't want to get into all the technology, but ultimately you're dealing with the best providers, it's coming in seamless, in a seamless way, and ultimately the people that are going to win are the investors, because the returns will be, you'll be able to see the returns, and there'll be complete transparency, just like you can between two different Airbnb houses or two different Uber vans. And long term, that's where we're going. And I believe that someone like RJ wins because now he gets access to investors globally. But what we couldn't continue to do is be the middleman with no stick, with a lot of expenses and with a lot of stuff out of our control. And I've asked the final poll here for the evening was, would you recommend us to friends? And for me, quite frankly, it's a case of we couldn't continue to deliver a service where things are out of our control. And the way we are looked at and the customer experience we're delivering is out of our control, and we want to bring that more and more in-house in terms of where we're at. Someone said, yeah, a couple of people have said, what's in it for me in terms of would you recommend it to friends? We've actually got a full channel partner now system, which is through Salesforce, completely managed. If you are interested, just type in there channel partner, and Milani, who heads that up, will be able to get hold of you, and you'll be able to see it. But I think really from my perspective, I'm conscious of the time. John and Todd, you guys have been online for 2 hours. We've pretty much come to the end of the questions here, and I see one more has just popped in. But I'm not sure if there's any final thoughts from each of you, and then if there are one or two more, I'll take 2 more questions, and then we'll wrap it up. It is 9 p.m.
Yeah, I'll go ahead and add a little bit to this as well. This is, the hassle-free or combining investors has always sounded like a good idea in essence, because it does share the cost. And from our perspective, we're always conscious. We also look for long-term clients and long-term viability, and we're constantly doing whatever we can to try to make ourselves more efficient in the process, and trying to keep those costs down. And as probably all of you have seen, we send out saying, hey, you may be better as a disregarded entity to lower the cost. So and that may apply as well when you get rid of all these residential properties and you just have the medical centers in the investment. The accounting costs will probably go down as a result of that, because we just don't have as much that we have to manage to do the tax return. So working together with Wealth Migrate, it's been a great relationship all these years, and we want to continue to make your experience better, not only with us, but with Wealth Migrate, so that it works. And we'll do whatever we can on our side to facilitate that.
Thanks, Todd. John, from your side?
Yeah, I can attest to, again, Scott, how much work has gone into this project by everybody from your team and everybody on this side as well. I think you're all to be applauded, and I'll echo what Todd says. It's always good to get better, and I think this is the better, definitely so. So congratulations on the improvements, and I look forward to this innovation and more.
Yep, and I think, thank you, John. And there's a quick question from Howard that I think is relevant for others. If I want to buy another house in the future, do we still come to Wealth Migrate or just go to RJ? I think, Howard, really that's up to you. If people want to do the DIY option, we obviously want to continue building relationships and adding value, but quite frankly, to help people invest in individual houses long term is not really part of the model of where we're going. Our overall vision is to provide people and delight people. I think I started the webinar tonight to share it with people through a platform experience, and so if we can help people invest in individual houses on the platform, then yes. If it's in a off-market environment where it's the old traditional model from 10 years ago, then sometimes you've got to say no and say, have a good chat with RJ in that process. I'm not sure, Michiel or anyone else, if you disagree with me, but we really want to focus on providing a world-class experience through the platform.
No, Scott, we've had individual investors still buying houses, so we've helped them, and we also help people that wanted to sell. But I think come 1st of July, I think really then that service is going to start to stop. So from our perspective, I think from after 1st of July, then it's a direct exercise. And then, like we said, from our perspective, we are definitely going to buy more houses, but we're going to buy it more on a bulk perspective. Yeah, so one option that we haven't really
also means you'll get better prices. If you're buying 10 properties, you're going to get a better price than if you're buying one.
Yeah, and then this is phase one, and then Scott, what we will definitely look at is to understand that if there's a demand, we're actually going to ask our clients that. If there's a demand, we have already sown the seeds that we can actually open up a new fund, which would be, let's call it an additional fund, where we then actually buy residential houses in a fund from day one. So instead of going directly, we could potentially expand this portfolio as well. So that option is definitely in the pipeline, both on RJ's side, Texas side, and Scott Gruber's side. So if there's a demand for it, we can expand this project to actually accommodate new investors online. But the first aim is first to deal with the existing investors.
And to make sure that whatever we do going forward is hassle-free, Michiel. So guys, I'm going to wrap it up. It's been a long evening. I'm sure there's lots of questions. We will follow up and send the information as we said. Howard, the question you asked me is a very, very difficult one to answer. Hopefully, people can see I'm maturing a bit, because as an entrepreneur, to walk away from business doesn't make any logical sense to me. But saying that, to build a world-class customer experience takes focus as well, and so we can't do everything. And I think what Michiel said really clearly tells you our strategy. We've spoken about it for many years, where we want to buy houses, but in 10-house packages, etc. Ultimately, bring it onto the platform. And if we lose some short-term business because that doesn't align with other people's individual needs, then so be it. But we fundamentally believe that technology is changing the way the world works. And ultimately, we have no doubt that technology will enhance and improve the way that people invest, take the hassle out of it for them, bring a lot more simplicity and safety, and we're backing that horse in terms of providing that solution. So I'm going to close out tonight. I just wanted to say thank you very much to Jacques. I know there's been a huge amount of work done on your side. Jake's, as always, to try and understand all the legal and the compliance and everything that Michiel and I want to promise, but it's not legal. So thank you for supporting and really trying to make sure that this is done in the right way. Yanni, who really is the stalwart that has actually provided you all on this call with her team, with the customer service, and really deserves the accolades for those votes that were more than 4 out of 5. To John and Todd, who have been people that have been supporting not only ourselves but our clients, now for many, many years. It's an ongoing relationship, and we're really excited that you're helping us evolve into the next phase. And then really to Michiel and Jaco. Jaco wasn't able to make it tonight. He had an appointment with his daughter, which is a very important appointment for when your daughter's 21. He's on date night with his daughter. But to Michiel and Jaco for really kind of staying the course here and turning a dream into a reality, and quite frankly, in my opinion, offering clients a better solution. We can't make sure the problems go away, but we can always make sure that we're committed to continue to find better solutions. And I thank you for committing and ultimately providing and giving people choices. So thank you very much. I appreciate it. And to all of you online tonight, we wouldn't be here without you. Thank you for trusting us. Thank you for, in many ways, being on this journey with us. And we hope that it will be the start of many more. And thank you for your time, and look forward to hearing from you, your thoughts. Good night.